I am Dr.K.Rani, Assistant Professor, Department of Commerce, Dr. SNS Rajalakshmi College of Arts and Science. Today my topic name is Canons. What do you mean by canons? Tax are the government most important source of revenue. Taxation signifies that act of levy tax. A tax is an obligatory charge or fee levied by the government on individual or company. Persons who are taxed must pay the tax regardless of any corresponding return from the government, goods or service. Tax can be imposed on the income and wealth of people or companies, and the rate of taxation might vary. Canons of taxation. Canons of taxation. By taxation canon, we simplify mean the features or attributes that a goods tax system should have. I truth taxation canons are connected to the administrative part of a tax in 1776. Adam Smith developed concept or canons of tax for the first time. Even in the 21st century, modern government use Smith taxation canon with imposing the collect tax. Adam Smith propounded four canons of taxation: canons of equity, canons of certainty, canons of convenience, and canons of economic. While other economic profound some other canons of taxation other than the four profound by Adam Smith. Canons of elasticity, canons of productivity, canons of variety, canons of simplicity, canons of expectancy, canons of flexibilities, canons of equity or equality. According to the canons of equality, the burden of taxation must be distributed equally or evenly among taxpayers. These types of equality, however, derive justice because not all taxpayers have the same ability to pay tax. Rich individual can afford to pay more tax than impoverished ones. As a result, justice required that a person with greater financial ability by highest rate. Canons of certainty. The tax that an individual must pay should be certain and not arbitrary. According to the Adam Smith, the time of payment, the method of payment, and the amount to be paid. Tax liability should all be apparent to the contributor and everyone. As a result, the canons of certainty encompass a wide range of connecting. It must be certain for both the taxpayer and the taxing authority. Canons of convenience. Tax should be imposed and collected in such a way that it is most convenient for both the taxpayer and the government. As a result, it should be painless and trouble free as possible. Every tax, Adam Smith emphasizes, should be levied at the time or in the manner most likely to be convenient for the contributor to pay it. Canons of economy. The canon suggests that the cost of collecting tax should be kept to a minimum. Any tax that has large administrative cost, extraordinary delays in assessment, and a high collection rate should be avoided at all cost. Other canons. Canons of electricity. Canons of elasticity. The canons of elasticity is very important to modern economies. These canons indicate that a tax yield should be flexible or elasticity. They should levied in such way that the tax rate can be adjusted in response to changing circumstance. Canons of productivity. According to Charles, as well known classical economics on the subject of public finance, tax must be productivity or cost effective. Canons of variety. Taxation must be dynamic. This indicates that rather than having singular or two tax, a country tax structure should be dynamic or diversified. Diversification of a tax structure will necessitate the participation of majority of the people in single tax system is implement only a certain sector. Canons of simplicity. Every tax must be straightforward and understandable to the public so that the taxpayer can calculate it without the assistance of tax personnel. Canons of expectancy. The tax should be expectative or beneficial so the government may defend itself against public criticism by argue for its need. Canons of flexibility. The canons of flexibility state that the tax system should be flexible enough to allow tax to be reality increase or decrease in response to government requirement. Thank you.